The majority of businesses in the UK rent their premises, and this basically results in a sizable chunk of money that the business owners have to contribute in the form of rent. And that is just considered dead money because you'd be increasing the wealth of other landlords. Hello everyone, welcome to another episode of Let's Talk Money and Mortgages. So we're here today to look at how your pension might be used to contribute to purchasing your premises. And with that in mind, I have Suneth joining us again. Suneth is one of the founding directors of the WIS group of companies. Suneth is an accountant as well as an IFA.
Yes, Abdul, quite right. Usually businesses rent their office space, and given that they're paying rent to a third-party landlord, they're only helping that landlord build their wealth. So it obviously makes sense for business owners to buy their own premises. And they can do this with a pension scheme. We'll talk in detail about SIPPs and SAS schemes, which is basically a self-invested pension pot versus a small self-administered scheme. Both are eligible to buy commercial property, and you can invest via these schemes or even directly into a commercial property or a mix of both. And we will cover all these in this video.
When you say commercial property, what types of properties are these?
So that's a good question because, mind you, buying property via a pension is restricted to only commercial property. When I say commercial property, we're talking about the likes of, obviously, office space, shops, retail units, pubs, factories, land. Important also to note is what you cannot buy. So anything that has a residential element to it, a SIPP or a SAS cannot buy it. So for example, holiday lets, or you'll have shops with flats over it. So that would have a residential component. So that's not allowed. Houses, anything that has a residential element is not allowed for pension buyouts.
Does that also cover properties that aren't necessarily within the UK? So, if there are clients who have properties abroad?
Now, unfortunately, you have to buy commercial property within the UK. It's only because SIPP administrators cannot validate the cost or rather the value of a property overseas. And so that causes a lot of administrative issues. And so it's limited to UK commercial property.
So the SIPP that you mentioned, now, obviously it would need money in there. So how would a client or how would we fund that?
Yeah, so again, there are various options available to business owners. One such is obviously contributions. Your business can make a sizable pension contribution to your private pension, right? So this is up to £40,000 every tax year. So that's possible. If there are, say, 3 directors or shareholders, you could pool pension funds together to buy a property. So that means the business can put money into each of these director funds, and then the SIPP will pool them together to buy the property. That's another way of doing it. Obviously, we have to think of things like personal contributions. Obviously, when you do a personal contribution, as you well know, the government tops it up by another 20%. So thereby aiding your commercial property purchase. You may have several pension pots lying around. So probably good to look at consolidating it into one, and then you'll have obviously more funds that you can deploy. Don't forget, a SIPP or a SAS can also borrow money. So there are banks willing to lend to pension funds, and you can borrow up to 50% of the value of the pot. So for example, if you have 200,000 in your pension, you can borrow up to 100,000. So with 300,000, you can then buy a property. So borrowing is possible as well. So there are various options where you can fund your pension scheme for this purpose.
So you mentioned borrowing. Now, what's the difference between, obviously I assume there are advantages as compared to going for a straightforward mortgage. So
upfront benefits are tax related. So if you imagine the business contributing to your pension, the business is saving corporation tax. So that's an upfront advantage. When it comes to income tax on rental income coming into the pension fund, that is also tax-free. So that's a big plus. Rental income is an investment income, and therefore it's not adding to the annual allowance. So again, a plus point here. Now, when the pension finally sells the property in the future, there will be no capital gains tax. Again, another positive. Also, don't forget, a pension is outside your estate for inheritance tax. Again, another positive way of building your wealth outside your estate. Other benefits include flexibility, where you own your own premises, so that gives you extra control. For example, a third-party landlord may be able to increase rent over market rates or can force you to move or sell the property, so you don't have any of these concerns. It's your property, and so you have control.
Getting your mortgage online doesn't have to be complicated. At WIS, our website will help guide you through step by step. Our fully qualified advisors can help you get the most suitable mortgage for you. Then you can relax, safe in the knowledge that WIS are working in the background to get your mortgage approved. WIS. Online mortgages made simple.
When it comes to properties, I believe from what we've seen over our time dealing with mortgage clients, is that the majority of them are jointly held. So is that an okay thing when it comes to a property being purchased through the pension?
Yeah, property can be bought jointly. So pension funds can be accumulated or rather consolidated to buy a property. So you can hold it jointly. You could hold it with a business. So for example, the pension would buy 50% of the property while your business could own the rest. So that's possible. There could be other multiple owners. So you can have 3 to 5 pension funds joining together to buy the property. So that's also possible, yes.
When people hear pensions, the first thing that comes to mind is I have to wait until I'm 55 or above before I can do anything about it. Is that the case with this? Do we have to wait until that point, or are we able to get the ball rolling a lot earlier?
The misconception is, can you use the money outside of your pension before retirement age? I.e., can you draw on your pension? Now, it is a good question. Any rental income coming in is coming in into your pension pot, which is helping it expand. Obviously, you can use that money as it builds to invest in other properties or make other investments within your pension umbrella. It doesn't mean you can draw money out until you reach retirement, obviously, but you can make the money work. So yes, when it comes to drawdown, we have to wait till retirement age, and you can draw down on these funds, but till then, it's going to be building up, so to speak.
So I suppose the last question that I could just think of is, normally when it comes to pensions and the work related there may be fees involved and there may be costs for the services and that sort of advice. So is there a general idea?
So with costs, obviously we're buying property here. So all the regular costs of purchasing a property. So think about stamp duty. It applies. So the pension has to have funds to pay stamp duty. Solicitor fees, bank fees, if there's a mortgage involved, there's surveyor valuation fees, insurance costs, business rates, all that comes in. Don't forget SIPPs or even a SAS, depending on which one you go with, will have their own costs. And if you're using a financial advisor, they'll have their costs. But also what people usually tend to forget is with commercial property, there is a VAT. Most likely the property is being sold plus VAT. So that's an added cost. So you must factor that into purchase price. Yes. So just a quick wrap up here. If you're a business owner, you've got cash in the bank and you want to utilize it, perhaps to buy the property or perhaps to purchase your own commercial property, you could do this via pensions. It's a very, very tax effective way of doing it, both for the business and for yourself. And so do ask if you have any doubts, and we'll be very happy to help.
Right. Brilliant. So if we've got any more questions, we'll definitely leave Sunet's contact details in the description below, and we'll see you on the next episode.
If you have any questions regarding any of the points discussed in today's video, you can call us on 0203 0111 9869. You can also visit our website, wisbusinessprotection.co.uk.